Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Well, stocks wrapping up a strong third quarter for stocks and bonds. Can you believe it? With the end of the month here, end of the third quarter, investors ending the month of September, seeming more convinced that the Fed may pull off a soft landing for the economy after all. We did see a positive finish today with the market moving slightly higher. The Dow coming in for a closing gain of 17 points at 42,330. The S&P 500 up 24 at 5,762, and the Nasdaq gained 70 at 18,189. It was a record-shattering month for both the Dow and the S&P 500 in the month of September, which is usually supposed to be the worst month of the year for the market. Big surprise this time around. Bitcoin also rallying, up 148 now to 63,579. Ethereum hovering just above 2,600, and Doge has moved higher now at 12 cents. Gold has also seen a record-shattering performance this month. Right now down $4 at 2,655 and change. It popped above 2,700 for the first time in the month of September. Silver has also seen a good run, up around $32 an ounce. The volatility index simmered down this month, right now down 1% on the day. Taking a look at NVIDIA, the Magnificent One, it got a pop today, up, 4 cents at 124 and change. And it's still positive for the month of September also, by the way, up about 2% for the month, up 145% since the start of this year, and up about 170% over the past year. Apple is near its all-time high all of a sudden, up more than $5 today at $233. Cerebras Systems, a maker of chips and other tech infrastructure for AI, filed for an IPO today, an initial public stock offering, as more startups look to make a name for themselves to take on, the Magnificent One, NVIDIA. The number of shares to be offered by Cerebras, not yet clear. The company based here in California, in the filing said it applied to listed shares on the NASDAQ global market under the ticker symbol CBRS. The price of oil today, we're watching, of course, developments in the Middle East very nervously, and surprisingly, oil has come under pressure, moving lower. Pressure by expectations that major oil producers will boost production in December, leading to a surplus of supplies as the outlook for demand remains uncertain. We've seen the price of oil today in New York pull back a bit. Fell a penny to 68.17 a barrel, and Brent crude in London, the global benchmark, down 21 cents today at 71.77 a barrel. We did hear from the Fed chair today on the economy. Fed Chairman Jerome Powell said the economy, in his view, is in solid shape, and the Fed intends to keep it that way. The Fed's goal all along has been to bring down inflation without, in his words, a painful rise in unemployment. He spoke today at a National Association for Business Economics event in Nashville. We're watching what's happening with the what appears to be an imminent strike at midnight tonight at the ports on the East Coast. An impending strike at U.S. East Coast and Gulf ports could affect the U.S. economy by as much as $4 billion a day, according to a new estimate from Jefferies analysts. But a number of container shipping stocks could benefit from market conditions, something we'll talk about later this hour. The Biden administration officials meeting with top port operators today ahead of what appears to be an imminent strike now at East and Gulf Coast ports, with a union contract expiring after midnight. The mansion tax, so-called mansion tax, ULA, here in Los Angeles County, not producing the results that were envisioned. Susan Shelley will be joining me live later this hour, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights here on 790 KBC, also on our great sister station in the Bay Area, KSFO. Governor Newsom vetoing a bill requiring speeding alerts in new cars. We'll get the latest on that from Lauren Fix, editor-in-chief of Car Coach and co-host of the Total Car Score podcast and our go-to car expert. But first, on your money, the markets and the economy, wrapping up the third quarter of the year and looking ahead to the fourth quarter now. Joining us live, top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, also Forbes magazine contributor. And Ken Winans also has his own weekly show here on 790 KBC, and that show is Winning with Winans, which you can hear at 6 p.m. Monday evenings right here on your favorite station, 790 KBC. So be sure to stay tuned in the 6 o'clock hour this evening. Ken Winans, thank you very much for coming to the line this afternoon.
Well, Frank, the old phrase on Wall Street, which is the market climbs a wall of worry, boy, that could not be any closer to the truth than what we've seen so far. Here we come through September, a lot of bad news, more bad headlines, and certainly the strike you just mentioned that's happening. And that is just devastating when you think about all the shipping on the East Coast. And in spite of all that, the market is at or near record highs almost across the board. This was a very broad-based rally throughout the month of September. And quite frankly, while I was so bullish in my latest Forbes article, actually putting a target on the S&P at 6,300. This is the real deal. It is not a time to necessarily be scared of the headlines, but look at what's going on with the market. And there's another old phrase called trend is your friend. And right now, the Fed is trending in the right direction, and so is the market.
Excellent, and certainly turning to the wisdom of the ages, the wall of worry was climbed, and the trend seems to be up. So, as always, you're right on target. What about the strike now and its potential impact? I don't know if you saw that Jeffries analysis that predicts the economy could take a hit of as much $4 billion a day, but container shipping stocks could benefit from market conditions, they say. And, of course, consumers are nervous. We don't want to see another toilet paper run and shortages, which could happen in this kind of a situation, right?
Well, and unfortunately, when you talk about shipping disruptions this time of year, it does bring back some of those awful memories of what happened during COVID when we just could not, the monumental freight logistical issues globally. This backs up everything around the world. And of course, it's going into the holiday season, which is when you have so many parts of the economy trying to work. Frank, it was interesting when you back into what's going on with shipping. It has direct ties with what's going on with Boeing, and it's going on, and I think it's going to spill over into the public sector. And it's something that, unfortunately, we don't hear a lot from the Fed. When you talk about inflation, you actually have to discuss it in two parts. There is demand inflation, which is what we do when we have rising prices of commodities and certainly products. Then you have what we call wage push inflation. And so when we talk about inflation coming down, we're not talking about inflation being eliminated, because when you have this pogo effect that goes on between prices go up on products, then everybody who is trying to buy those products needs more money to pay for them. This is a vicious cycle that goes on and on and on. The Fed chairman knows this, but it is interesting that here he's trying to steer this soft landing right in the face of this massive strike in the ports. So again, unfortunately, we're going to have these kind of headlines going on for, I think, many years to come, many different sectors, many different parts of the economy, different parts of the world. But when it happens, you're 100% right. Certain industry groups get hit, certain industry groups benefit, and as an investor, you got to be nimble enough to pivot your portfolio to take advantage of these situations. It's
concern about an all-out war in the Middle East. Surprisingly, oil is down recently, below $70 a barrel once again in New York. But given the Middle East powder keg, that could change pretty much in the flash of an instant. What do you see ahead on that front and for energy prices here?
Well, the thing is it's funny, the other big energy thing that I am actually thinking we have to be worrying about is natural gas. And the reason I bring that up is that we're going into the winter season. Even if it's just a moderate winter, we all use natural gas for whether it's cooking our food or heating our homes. So we have that going on. What's happening in crude oil is very seasonal. It's very typical this time of year to have oil prices back off, and then they begin to stable, especially as refineries are doing changes in their mixes for the winter blends and all this other stuff. So again, it's not unusual to have it happen. I would say that one of the things that's helping, what you talked about what's going on in the Middle East, is that the countries that are at it right now are not necessarily big oil producers. They are the other parts of the Middle East that don't have the oil, so therefore it doesn't affect the commodity. But again, geopolitical concerns with transportation, especially if you take a strike certainly at our ports, coupled with something else happening in the Red Sea, that could be a devastating 1-2 punch for the global economy. So we just have to wait and see how it all plays out.
All right, so we have the Dow and the S&P 500 wrapping up the third quarter at a record high. If you can get out your crystal ball, does this thing have more to go? What do you see ahead for the fourth quarter?
You know, Frank, I'd strongly encourage everybody in the audience to read my latest Forbes article, and it's laying out a very strong case that when you have a positive September, the way we do, because it is true, September is usually awful. Any gray in my hair or in my head has been caused by September, a good part of it. But the fact we had such a powerful September tells me that there's going to be nothing but a continuation of this rally, maybe not straight up, and it's not going to be the same groups, but the trend is definitely up. And I'm just concerned that people who have too much cash sitting on the sidelines, whether it's because they're concerned about political issues, concerned about geopolitical issues, they just have to literally trust history here a bit and say that don't be caught with too much cash going into the holiday season. I think you're going to live to regret it. But while I'm talking about it, let me bring up an interesting statistic that you're not going to hear in pretty much anywhere else but on this station. You need to look at what performed in the third quarter. And what's interesting, it was not tech that was the main lead. You talked about NVIDIA, but the truth is you need to look at these other groups that almost nobody talks about. And the one that I'm going to talk about later is my recommendations. It is finance. The financial sector was the lead group in the third quarter. And I believe that leadership is going to continue all through the rest of this year. So I think that a lot of portfolios are out of balance with what is going to lead the market if this bull market is going to continue. And I think that the word of the day is, yes, it is a bull run, but number two, it's not going to be the same stocks that got you here. You have to rotate and rebalance your portfolio.
Given the tremendous damage caused by Hurricane Helene, the human toll as well as the physical damage, the storm surge along the west coast of Florida was quite remarkable. And, of course, in the Carolinas, they're recovering from the storm. Since you're a market historian, what kind of reaction do we usually see among the insurance names and certainly the names like Home Depot and so forth involved in rebuilding efforts in this kind of a situation?
Well, you know, Frank, first off, you know, I always have to preface when I say these things. Look, I have a heart. My God, I mean, by all good grief,
Yep.
We all wish our best for the people out there. So when I make these comments, it has nothing to do with the loss of life and the lives disrupted. But in my book, Investment Atlas, I covered, basically calamities, whether they're earthquakes in California or they're, certainly what happened in Hurricane Katrina, certainly the horrible tornadoes that hit. At the end of the day, there's virtually no impact to the overall market when these things hit. I know that might be a shock to some people, but it is true. But what you bring up is 100% right. You got to look at the individual groups and who might be hit with it. And in fact, I find it interesting that insurance stocks, even property casualty companies, actually were up today. So it goes to show that they are well prepared for these kind of things. I think anything that has to do with construction, whether it is to repair the homes that have been damaged because of this horrible situation, or just the continued building of new housing stock, which we talked about in the last show. I think anything in that sector is sector number two that people need to be invested in, which is anything involving housing and housing supplies.
On the air live with money manager Ken Winans, the CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Should also be noted, gold hit a record high this month, Ken, above 2,700 for a while this month. Right now at around 2,655 here at last check. Where do you see gold go from here?
You know, it's interesting. They were talking over the weekend, almost all the major articles that I read, whether it was online or I'm still one of the old guys. I still like newspapers. For me, I'm probably for you too, Frank, I can scan it quicker. But the number of articles talking about gold and the rally in silver is alive and well. And actually, one article was talking about there used to be, the big three, which was gold, silver, and platinum. Platinum, we don't even really talk about much anymore. There's a shift out of that metal and moving more into gold and silver. But I think, again, the rallies in these metals is alive and well, whether it's because of inflation, whether it's because of global demand. In the case of silver, it's a major component in AI chips. You can cause, for whatever reason you want to cause it, but these things are going to continue. And I continue to think people should look at having some gold or gold ETFs in their portfolio. Again, inflation is going to be with us for a long time.
It should be noted, silver up 31% since the start of this year, hovering just above $31 an ounce right now. Gold also around that percentage gain for the year, hovering at around 2,655 and hitting a record high recently above 2,700 an ounce. You also cover the cryptos, so let's get to some of the exciting stuff here now. Bitcoin's seen a wild ride this month, and right now just below 64,000 at last check. What are your thoughts on Bitcoin and the other crypto names here?
You know, Bitcoin is just in what we call a range-bound market. It's trading between its previous high and that basically you get around 59,000, 60,000, and it comes right off of it. So you have people trading it and probably making a lot of money doing it. But I think that the big turnaround story for the last month has to be Ethereum. It had absolutely gotten massacred throughout the summer months for a lot of different reasons, but it certainly was just really getting beaten up. But the rebound in it is alive and well. But Frank, I'll tell you, again, you talk about gold and silver. The big talk right now are basically metals-based tokens. And I think you're going to hear a lot more about these stable coins being tied to commodities, and certainly something like gold and silver, to me, is a logical place to go. So I think people in the crypto world, you should keep some of your powder dry for some of these new areas that are going to be coming out, especially early next year. And whether or not they actually get into the ETF world, that's not as important to me. It is just that you have a coin that has good sponsorship, good liquidity. That's what people are looking for right now in the crypto space. I know the ETF thing, everybody is hoping for that wonderful ETF expansion in crypto. What I came back from Washington and what I kept hearing in Washington is that they're applying the brakes on the regulatory front on allowing a whole breakout of a lot of the crypto ETFs. I think it's just going to be slow going on any new things there, but I think stablecoins is where people should be looking if you want crypto in your portfolio.
All right, given the choice of analog gold or digital gold or blockchain instead of gold chain, what's your guidance on that?
Oh boy, Frank, you like to put me on the spot, don't you, buddy? I guess I didn't buy you the right wine last time I was down in LA. You know, I believe it's whatever you're comfortable with in your portfolio. To me, I have always treated crypto as a commodity, and I'm looking at commodities that make sense. And right now, I mean, as I look at what's going on around the world, and I certainly look at what can be a massive disruption in commodity opportunities with the shipping thing, I think you have to see in the physical world right now. I think that crypto people who have no gold or silver are making a mistake. And then, quite frankly, there has been just a massive rally in certain commodities. I mean, right now there have been reports about what's happening in cocoa. I keep talking about cocoa quite a bit. I just think that there's opportunities to go after commodities that don't necessarily have to be digital commodities. You should be wide open on your opportunities.
Terrific, Ken. We'll look forward to. I wish we had more time here, but guess what? We will have more time at the 6 o'clock hour tonight, thanks to you. We do appreciate that, and we always appreciate you having you on here this afternoon. And on Mottek On Money, we'll be able to continue the conversation and get into a lot of different things here with you in the 6 o'clock hour on your new show, Winning with Winans. Been speaking with top-ranked money manager Ken Winans, the CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, also Forbes magazine contributor. Be sure to check out his latest article. Ken, thanks very much for coming to the line now. Look forward to speaking with you again live in the 6 o'clock hour here in 790 KABC.
Sounds good, Frank. Talk to you soon.
Thank
Bye-bye.
you very much. Right out to the freeways now. 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Big finish to the third quarter of 2024 on Wall Street, with the Dow and the S&P 500 finishing the day at a record high. The Dow 17 points at 42,330. The S&P 500 of 24 at 5,762. And the NASDAQ gained 70 at 18,189. The yield in the 10-year note at 3.79%. Turned out to be a winning month of September for the major averages, with records being set. Bitcoin also moving higher today, right now about $148 at 63,579. Ethereum pulling back 9 at 26.04. Doge at 12 cents. NVIDIA, the magnificent one, also having a winning month. up 4 cents today to 124 and change. And we see Apple up $5.21 at 233, near its all-time high. Gold has also had a glittering run this month, hitting record highs above 2,700. Right now, around 2,655 and change. Silver at 31.46. Silver, by the way, up $7.50 since the start of the year. Gold, by the way, is up nearly $600 an ounce since the start of 2024. And now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Well, it turns out the so-called mansion tax in Los Angeles is impacting commercial real estate more than it is mansions in Los Angeles. Those pushing ULA took aim at wealthy Angelenos in hopes of taxing real estate transactions to try to help the homeless, but it's not quite working out that way. Let's bring in Susan Shelley now, columnist with the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights here on your favorite station, 790 KBC, and our great sister station, KSFO, in the Bay Area. Susan, wonderful to have you with us this afternoon.
Thank you, Frank. Great to be with you.
I know you've taken a good look at this ULA and have explained it beautifully since it went into effect a little over a year ago now, almost 2 years now, right? What do we need to know about this latest study on ULA and how it's adversely affected the real estate business here and commercial real estate in particular here in the Los Angeles area?
Well, everybody predicted it because obviously if you put a huge tax on the sale of real estate in a particular price range only in the city of Los Angeles, then developers are going to go outside the city of Los Angeles and develop in other cities. And there are plenty of other cities. There are 88 cities in LA County, and none of them have this. So it's a very questionable tax legally. The Howard Jarvis Taxpayers Association is still pursuing a lawsuit claiming it is invalid because Prop 13 prohibited real estate transfer taxes, and the courts said, well, that only applies to when they're for a special purpose. Well, this is a real estate transfer tax for a special purpose, and it is not constitutional to do this. So it's definitely going, the appeal, it was dismissed in the lower courts for not a good reason involving the fact that it was a citizens' initiative tax increase, which we think is a questionable ruling also, and it will be appealed. And that's going forward. So we'll see if this tax survives. And interestingly, the city of Los Angeles has been very cautious about spending the money because if it's declared invalid, everybody gets a refund of what they paid for this. So they have to spend it very cautiously, and they have to be sure they can cover those refunds if it's overturned. So
this is the measure ULA that was passed. It was back in 2022 that was supposed to fund housing and homelessness efforts in the city through this new tax on real estate selling for more than $5 million. They gave it the name mansion tax to make it splashy, right? But it's affected commercial real estate in a big way, more so than mansions, right?
Very misleading. It even affects affordable housing projects with apartments that people would like to rent, but people can't build them because they will face this 5.5% real estate transfer tax when they sell the buildings, and that affects the financing, and that affects the whole, whether the thing pencils out at all. So it affects apartments, affordable housing projects, all commercial real estate. It even affects buildings that are in foreclosure, because it doesn't matter if they're in foreclosure, they still owe the tax when that building is sold, 5.5% of the sale price, regardless of whether it's a profit, a loss, a bankruptcy. Doesn't matter. 5.5% tax on the sale price, not on the profits, but on the sale price. And it's just a terribly drafted measure, as you would expect, because it's a so-called citizens initiative tax increase drafted by the people who will get the money from the tax. But guess what? It's only brought in $375 million since it was implemented in, I believe, April of last year. And they told the voters that it would bring in $600 million to $1.1 billion every year. Not even close. And that's because of what you were saying, that it has depressed real estate development in the commercial sector, especially in Los Angeles.
This at a time when commercial real estate is already under pressure, given the see-through buildings. Office, of course, still very much under pressure, especially in the downtown area. So we're watching this very, very closely. You said that the money money is being brought in, $375 million. How is this money being spent, or is it just sitting there now? I understand it might be used for some sort of new rent relief efforts or something, right?
Yes. In the first year, the city approved spending $150 million. And then they spent it on emergency rental assistance and income support. And this year they're thinking of spending $160 million, and they're thinking of putting $100 million of that into so-called social housing, which apparently is a concept where the tenants own the building together. And that's sort of like a co-op, and that is not it's not a problem-free form of ownership. So I don't know why they think that would be successful, but that's part of the plan that they're looking at to spend this money.
All right, so the legal fight continues. Can you go into more detail here? And what other prospects of having this removed? Obviously, the commercial real estate folks who we talk to on this program from time to time were very upset about all of this. They said it's the stupidest thing that's ever been done. And obviously the end result here with what's happening, this big chill here on commercial real estate is the proof of the pudding here.
Absolutely. Well, there were really two major reasons that this was an invalid tax. One is that it should have received a 2/3 vote because it was a tax increase for a special purpose. But before you even get to that, it is an invalid tax because Proposition 13, which cut property taxes and made it harder to raise them, also put in protections to make sure that local governments could not go around Prop 13 and tax the same people the same amount by a different name. And real estate transfer taxes were one way of doing that, so that was flatly prohibited by Prop 13. And interestingly, in the Los Angeles City Charter, the people cannot do by initiative what the city government itself is prohibited by the Constitution from doing. The initiative process and the city council have exactly the same powers and exactly the same limitations. And that's in the city charter even before 1911, when the initiative went statewide. So this is a really strong case that's going before the appellate court. And we are very confident that Measure ULA will be overturned. So we caution the city not to spend the money if they can't refund it.
Thanks for laying it out beautifully. Well, we have a moment. You're going to be going on the air tonight, right, on the Howard Jarvis radio show, which is heard on actually Tuesday nights. I've been one day ahead. I had a big event over the weekend with the Over the Edge event where I rappelled off the top of the 25-story Universal Hilton Hotel. So tomorrow night, you want to give us a preview of what's coming up tomorrow night?
Congratulations. Congratulations. Yes, we have the Howard Jarvis radio show tomorrow at 6. We'll be talking taxes. We'll be talking politics, ballot measures, all of that, and taking your calls live on the air.
Terrific, Susan. Thank you very much, and look forward to our coverage here of all things tax matters with you, and best of luck with this ULA fight. That's Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights on 790 KABC and our great sister station, KSFO, in the Bay Area. Live with us here now on Mottek On Money on 790 KABC. Mottek On Money continues here on 790 KABC. Turning now to car news, let's go to our go-to car expert, Lauren Fix, on a big story here. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. We've been talking about this, and there was a lot of nervousness here in California, but it looks like Governor Newsom now has vetoed a bill over the weekend that would have required new cars to beep at drivers if they exceeded the speed limit by at least 10 miles an hour. California would have become the first to require such a system for all new cars, trucks, and buses sold in California in 2030, but it looks like this is not going to happen now. Lauren Fix, give us your reaction to that big news here.
This is excellent news. We started off a while ago with letting people know about this, and a lot of people have spoken up. And I think someone on the Newsom campaign said, if we're ever going to run for president, we better not make this happen because it would make us unpopular. So you're seeing him do a couple of moves that I think he's going to make a move for president the next round. But in the meantime, this is good for us as consumers. I have driven some of the newer cars that at 5 miles an hour over the speed limit, it starts beeping and it doesn't stop. It's incessant and it's frustrating. And it's supposed to make people be in compliance with the speed limit, but there are times when you are on an on-ramp, you have to avoid an accident, you have to get around a situation, and it's more of a distraction. So I think it's very smart that Gavin Newsom decided not to sign this bill and to veto it, and this is a win for us. San Francisco Representative, I think his last name is Wiener, was the one who put this up, and he wanted to make it even more stricter than it was originally. So it looks like we've won this one, and thank you to everyone who has put some pressure on the governor not to sign this into law.
Who do you think was behind this? We do see the Democratic State Senator Wiener sponsored that bill, but Wonder what industry was pushing for this. Was it the insurance business or what?
I don't know if the insurance industry would do that. The insurance industry wants you to stay within the speed limit, which is why they sell those little things you can plug it underneath the dash. And if you don't speed, you're not an aggressive driver, you're not aggressive around corners or brakes, then you're supposed to be able to lower your insurance rates. And insurance rates are up over 50%, especially in California. I think this was pressure from the Republicans, even though they're a minority essentially in California. But I think that somebody who's setting up his future presidential campaign has said this is not going to be popular on a nationwide basis. So let's not sign this and have this used against us down the road. So I think it was a smart move. And as far as I'm concerned, he's going to have to start on doing all that EV mandates and everything else for people to even consider him as potential.
On the air live with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. And this, of course, another example of how technology is in the car with us, AI and all these other systems. They're calling this, what was this, the name of this system that they were calling this some sort of intelligent regulation or something?
Secure innovation. Yeah.
There you go.
It's always used under something else. It was SB 1047, and it was all about safety and security. And it's easy. You can pass anything that way. But in 2026, we have the kill switch bill that is going to be definitely in those cars. I'm already driving cars that have some of that technology in it. If it feels that you're not paying attention, if it feels that you're distracted, if the car based on a computer, which you can call it AI or computer technology, thinks that you're doing something that is considered not acceptable to the car brand, that information will not just be reported to your insurance company, to the police department, but it's also going to be able to put your four-ways on and pull your vehicle over. And there's going to be a lot of upset people because as we pushed hard to get people to comment, which more comments were on this kill switch bill than anything else, Senator Massey took it to our House of Representatives Massey, brought it to the floor, and 19 Republicans voted for leaving the kill switch in. Although it sounds great, but if you're driven around by someone, it's different than if you're actually driving a car and you have to be somewhere, a family member, somebody's in an emergency. There's a million scenarios. It's so important to be able to get in your vehicle and drive there to help someone. And you're not going to be able to do that if you're under stress or if it feels that you're under the influence of anything. Even if you had nail polish remover to take off your nail polish or you're using alcohol on a wound, it's going to assume that you were under the influence, and that will not make your vehicle start. I think there's going to be a lot of unhappy people.
Isn't that something? Well, thanks for laying that out. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here. Remember when we had the pandemic and supply chain was mentioned every 5 minutes, and it looks like with this imminent strike here now at midnight back east and along the Gulf Coast at ports, tens of thousands of longshoremen at 14 ports along the East Coast and Gulf of Mexico poised to walk off the job early tomorrow morning. Negotiations are continuing. If there's no deal, they will disrupt the economy and so forth. So how is this going to impact the car business if this strike happens?
Oh, it's going to be huge. I'm actually monitoring it by the minute. I'm very concerned because not just cars that come in from other countries, but also those components. And you think, well, I'm not buying a new car, so it doesn't faze me. Well, it will. When you go to try and get your car repaired and you go to your car parts store or your favorite dealer and you say you need to have something replaced, they're going to say we can't get the tires or we can't get the component, the suspension component or a computer chip or whatever it might be. It's going to impact. Think about those people that even bought phones. Sometimes they're shipped in by air because they're light and they're small. But if it's anything larger than that, most likely it's coming in via ship. And there's already saying there were, as of this afternoon, there were 35 ships sitting off the Newark port that were already told don't come in. And those longshoremen left at 2 o'clock this afternoon. So that means we're already in a negative situation where those ships that were coming in with cars, components, parts, appliances, whatever it might be that you're looking for, won't come here. And it's going to impact the holiday season. It's going to impact dealers. It's going to impact everybody. I don't think anyone's going to get away with this. And what really frustrates me is that the administration, including Gina Raimondo, says, I'm not focused on that. That's actually what she said. I'm not focused on that. This is a very important situation. And beyond that, President Biden said that he's not going to get involved. And that's concerning because he could actually invoke the Taft-Hartley Act, which is around from 1947, that allows the president to request an 80-day court ordering, like a cooling off period. but he says he's not going to invoke that. So that means that we all, as Americans, will not be able to get the pieces and parts we need. And mind you, this is not just the East Coast, but goes all the way into the Gulf. So the only place things are going to get in are going to be from the West Coast, which are going to be overloaded. And we'll be back to that situation again with ships waiting to come in.
Going to cost the economy billions if this thing happens, and it'll probably be the lead story, of course. So tomorrow we'll stay in touch with you on all of that. Lauren, thank you very much for joining us live here this afternoon. That is Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Stay tuned now for the 790 KBC News Blitz with Randy Wang, who went over the edge with me in that big event we had last week in support of Union Rescue Mission. He'll probably talk more about that and more coming up on the 790 KBC News Blitz. Stay tuned. Coming up next.
Hey, it's Rich Eisen here. Join me and my compadre, Chris Brockman, every Monday on the Overreaction Monday podcast.
A 2023 last place team will win a playoff game this year.
I'm taking the Cincinnati Bengals to be that team. If you gave me two,
safe bet.
If you said two last place teams, I might say that's an overreaction. Come react or overreact with us. This one makes it much easier. Okay. So thank you for making it easier.
Well, tune in next week.
Overreaction Monday, wherever you listen.